The problems in the US banking system are growing, and American data has gradually increased the likelihood of a recession. The only optimism is still in the unemployment data, but it's challenging to obtain accurate data because it's continually being revised. However, when we look at the big picture, things seem to be getting mixed up. The September turbulence is slowly affecting American markets as well. Will this trend continue into the next week, or is all of this just a correction, and will the upward movement continue? We will evaluate this and more, including cryptocurrencies, in the first video. There was indeed an atmosphere of optimism in American stock markets, and there had been movements in that direction for some time. As I mentioned in last week's video, September is generally a highly negative month for American stock markets. However, based on the data, markets were somewhat negative last week, but the previous week's low-volume positive sentiment wasn't completely extinguished. So, will this trend continue into the next week? Let's look at some data. For example, last week, the service PMI came in as the worst in 7 months, providing a clear indication of an economic slowdown. But what I find more concerning is the decline in disposable income in the US, showing that the purchasing power of citizens is gradually disappearing. To understand this better, let's look at a chart. For a long time, there had been a gradual increase in personal savings, especially during the pandemic when people were trying to save more. However, after the pandemic, with the reopening and extra money in hand, spending plans went awry. Then came the process of interest rate hikes and high inflation, coupled with the inability of your purchasing power to adapt. Look at how serious this period is, with personal savings sliding down, disposable income decreasing, and people gradually reaching the end of their credit card limits. This is a strange and troubled phase we are entering, akin to the period before the 2008 crisis when markets were optimistic. Remember, in the lead-up to the 2008 crisis, markets were optimistic, and then suddenly everything turned chaotic in September with the fall of Lehman Brothers. Are we entering a similar phase now, or will they extend it a bit more? We will find out, and that's why these times are particularly interesting and intriguing. On the other hand, with October comes the start of postponed student loan repayments that President Joe Biden had deferred but was later overturned by the courts. This is concerning because it means that those who couldn't save in the first place will suddenly have to make retroactive payments, causing even more money to be withdrawn from the system and further reducing consumption. This will lead to a challenging period as consumers won't have much money to spend, and we are already witnessing a significant drop in retail sales. Many companies, from Dollar General to Nike, have seen their stock prices plummet in recent weeks. The reason behind this is the lack of consumer spending due to the lack of savings. In summary, the situation is becoming increasingly complicated, and we'll have to keep a close eye on the upcoming weeks. Nasdaq at 15,172. We are still above our trend tracking level, but the deterioration from last week seems to resemble a double top pattern. When I compare it to very old times, it reminds me of the peak in 2000, which had a somewhat tighter pattern. Now, if you look at this monthly chart after the rise in 2000, you can see that in 2002, the Nasdaq index suddenly dropped from 4,780 to 795. It remained relatively flat for a long time and then, in March 2009, it was back at the 1,040 level. Look at all those years. We've risen from 1,040 to 16,700 since the 2009 low. I wanted to bring this chart to your attention because it's like a summary of monetary expansion. It began in 2002, and then the real expansion accelerated from 2009. But even the pandemic drop pales in comparison because it was a short period. But in the overall picture, I thought this era had come to an end. Technology will continue to be a part of our lives, but the era of financing all of this with cheap money, during a time when the world was governed by a single global pole, is shown beautifully in this chart. But now, as we return to a multipolar world, things are getting more complex, and we are entering a period of rising commodity dominance and increased costs. This means that technology cannot rise at the same pace and with the same pricing. Looking at this chart, we can see the possibility of it being the first top, and here is a zoomed-in weekly chart of the last move down. It looks like the second top is forming now. So, the probability of a very long-term peak forming is quite high, and we will examine it carefully. S&P 4505, as I mentioned last week, is our trend tracking level. A rising channel on the weekly chart had been broken, and it was tested again this week, but we are still close. There hasn't been a strong move yet, but as long as we stay below 4,505, the likelihood of forming a major double top is high. Dow Jones is similar, but it's a much flatter market. If we continue to stay below 35,070, there's a high chance that a major double top has formed, and it could retrace to 18,000. Now, let's move to individual stocks. Apple. I mentioned last week that there was an opportunity to sell when the gap was filled, and we saw direct sales this week. On a weekly basis, we see an ABC pattern and a bearish engulfing candlestick pattern, indicating a downturn. So, after an A decline, we'll accept a B rise. Now, we're starting to see the beginning of AC decline, and potential targets are shown on the screen. We'll see if it goes lower, but our trend tracking level is $183.50 for Apple. Tesla. The price has dropped significantly, from $120,000 in January to $80,000 now. This kind of price drop might increase volume, but it indicates that sales are not as easy as it seems. Also, China banned Apple products recently, and tomorrow, there might be similar bans on Tesla. These are signs of the end of the era of neoliberal globalization. Nvidia. I can't look at it simply because it's in a massive bubble. Financing other companies, especially its subsidiary, and then having them place more orders, is starting to be talked about as an unethical practice. Plus, insiders are still selling. Last week, the CEO sold another $50 million worth of shares. So, Nvidia is facing increasing sales pressure. Amgen. This health company is showing signs of an upward move. As long as it stays above $27.74, we can look at it positively with a target above $36. Coterra. It's a slow-moving energy company, primarily involved in natural gas. If it stays above $27.74, we can look at it positively, with a target above $36. Now, moving on to cryptocurrencies. Bitcoin. It's still at $26,666, and not much has changed since last week. If it stays below this level, there might be the formation of a head and shoulders pattern, which I'm closely monitoring. Breaking $25,000 could lead to further downward movement. Ethereum. It's in a similar situation. As long as it stays below $1,670, the direction is likely down. XRP. Ripple hasn't seen significant changes this week, and as long as it's below $0.5151, the direction is down. It's one of the cryptocurrencies I think will stay in the long term, but there are issues related to its supply. In conclusion, it's an interesting week ahead in the American markets and cryptocurrencies. Stay vigilant and follow my channel for updates. Remember to subscribe for notifications. Wishing you all careful and profitable days.